Welcome everyone to part 2 of the Allegheny Conference's Small Business Webinar Series that we're hosting to help businesses of all sizes navigate through these uncertain times and to enable all of us to work together to help the Pittsburgh region move forward as the crisis comes to an end. My name is Bill Flanagan. I'm Chief Corporate Relations Officer for the Allegheny Conference on Community Development, also the host of our region's business on Channel 11 WPXI TV, and it's my pleasure to serve as the moderator and the host of our webinar today. Today our focus is on the Federal Stimulus CARES Act, and in particular the Paycheck Protection Program, which is the $350 billion portion of the CARES Act that's devoted to small businesses, nonprofits, the self-employed, and independent contractors. Before we begin, we really want to thank our sponsors for this online series of events: Peoples, Giant Eagle, Highmark, and the UPMC Health Plan, who've stepped up to help support our communications during this crisis. And we've also got to give a shout out to the members of the Allegheny Conference, our Regional Investors Council, that provide the support that we need to sustain the organization through good times and more challenging times. Today, you're going to hear from Angel Marschik of the Small Business Administration and Heather Thomas of Huntington Bank, who are at the heart of helping small businesses cope during the crisis as well as get access to capital. And we know that all of you participating today are either a small business struggling to stay afloat and move forward during the crisis, or you're part of an organization that's dedicated to helping small businesses and your communities thrive. So we hope our webinars will provide relevant, timely, and useful information for you. Now, as participants, we have muted your microphones to give our speakers the spotlight during their remarks. But please feel free to submit questions through the Q&A feature that you'll find at the bottom of your webinar screen. And we'll address them in the Q&A segment during the second half of today's webinar. Now it's my pleasure to introduce our first speaker to get things started. She's Angel Marschik, the Supervisory Lender Relations Specialist for the U.S. Small Business Administration. Angel, thank you so much for joining us today.
Thank you, Bill. Thank you for having us, and thank you to the Allegheny Conference for doing these series. It's such an important topic right now, and we know that our small businesses are facing, challenging times, unprecedented times, for everyone in the United States, and the Small Business Administration is committed to helping those small businesses. This is a very fluid situation. We are working to improve things each and every day, each and every hour, to make the process easier and better for our small businesses, and a little perspective on everything we're doing here. The Small Business Administration annually does $29–30 billion in loans each year collectively throughout the United States. This program is going to bring $349 billion to the streets, to the small businesses in a very short period of time. So we know that everyone is anxious. We are working with our bank partners. We are working with the small business community and organizations like the Allegheny Conference to make sure our small businesses have the information that they need. So I'm going to talk a little bit this morning about our economic injury disaster loan. We refer to it as our EIDL loan. The different distinction between the two loan programs, the Paycheck Protection Program and the Economic Injury Disaster Loan Program, is that the Economic Injury Disaster Loan, the EIDL loan, comes directly from the SBA. You would apply through our SBA.gov site. There's a link on there for small businesses. There's information about the EIDL program. There's information about the Paycheck Protection Program. So with regard to the EIDL program, that was the original program rolled out first. Small businesses can access up to $2 million. The interest rate for small businesses is 3.75. For most of our private nonprofits, 2.75, with terms up to 30 years. This program is made to suit to supplement lost revenue for people who aren't operating right now, who might not be an essential business, who had to shut down. It's a great program. You would use the funds for fixed debts, for payroll, your accounts payable. The application from if you applied 2 weeks ago to if you applied last week to if you applied today, the process has gotten much easier, much better. We're hearing from small businesses, it's taking them 10 to 15 minutes to go through the application process. A couple words of caution, whenever you're filling it out, if there is more than one owner, you will be prompted at the end of, I believe it is page 3, where you're putting in the owner information, you will be prompted to complete for each additional owner. So make sure that you have that information available if you have more owners to the business. And on March 27th, if you happen to have applied prior to March 27th, the SBA had rolled out an additional advance of up to $10,000 for small businesses. Again, it became available March 27th. If you've applied prior to that, you would need to go back into the portal. You would walk through the application process again. However, this time at the bottom of page 4, you will see in red a little checkbox. And that checkbox will tell you, will ask you, would you like to be considered for the up to $10,000 advance? You would check that box and resubmit. And that's the only way you're able to gain access to that additional $10,000 advance that was made available. Again, March 27th is the date on that it became available. Additionally, how this program works is once you are approved, you will be assigned a case manager, and that case manager is going to be with you throughout the rest of the program. So once you're approved, that case manager will work with you to close on your loan. They will help you with those loan documents. They will help you with advances. And depending on the loan amount and the time frame, you will receive advances under the EIDL loan program, and that case manager will work with you to schedule your first advance and schedule each additional advance. And the hope is there that we're being told that it's being calculated on a 6-month working capital need. This is a working capital loan. The loan cannot be used. A question we receive all the time, can this loan be used to refinance other debt that is a higher interest rate? And it cannot. This loan is really purely working capital to help those small businesses to supplement lost revenue. So it is calculated over a 6-month time period, we are told, and hopefully no one will need 6 months. We will be up, we will be running, we will be talking to each other, we will be shopping again well before that time frame. So make sure that you have your case manager information once your loan is approved. They will help you throughout the process. The second loan program I'm going to talk to you about today is going to be our Paycheck protection loan program. And that was the program that was rolled out last Friday. And that's the program that I had mentioned earlier. It follows our traditional 7A loan program. If any of the small businesses participating today ever received a loan directly from a lender, SBA guarantees the loan. And for this particular program, SBA will be providing 100% guarantee to the lender who makes the loan. This loan really is emergency working capital. It's to keep your business operating during the COVID-19 crisis. It's to cover your payroll costs. It is for up to $10 million. The interest rate is 1%. And the difference on the two loans, our idle loan, you may have up to 30 years to pay it back. With the PPP program, you will have a term of 2 years. With the idle program, collateral is requested for loans that are over $25,000, but the lack of collateral does not hinder you from getting the loan. If it's there, your case manager will talk to you about it when you apply. If you don't have it, it will not hinder you from getting your loan. With the PPP program, there are no personal guarantees, there are no fees. So with either program, idle or PPP, there are no fees. Again, the idle is through SBA, the PPP through whoever you bank with. And one of the things, we get a lot of questions of who's offering them. If you go out to our website, you can go out to sba.gov and look for your district office. We post our loan numbers every month out there. You can look over the last couple years, see who is making the loans. But right now, for this Paycheck Protection Program, SBA is onboarding a lot of banks who traditionally didn't utilize the SBA programs to make sure that you can go to your local bank should they choose to participate and get access to a Paycheck Protection Program. Your best ally in any situation, good times or bad, is the bank that you deal with. They're the people who know you. They're the people that you see each and every day, that you interact with for your bank needs, for all of your banking needs. So if you feel that this is a program that would be helpful and useful to your small business, we absolutely do suggest that you reach out to whoever you bank with today. Some of the banks who may not be participating or may not be participating quite yet will give you a time frame when they expect to be participating. They will also, if they are not a participating lender, what we have seen is those banks may be referring their clients to a bank that has agreed to work with their clients. So start where you bank. They are always going to be your biggest and best advocate for you. I'm sure my co-presenter will echo those remarks. You know, we're all in this together. We want to see you get funded. We want to see you get the capital that you need. For the Paycheck Protection Program, the purpose is really to cover payroll costs. It's to cover your current payroll cost, your benefits cost, and you know, Heather will go into that a little bit in more detail. Can you apply for both loans is a common question, and should you? And we get tons and tons of eligibility questions, and we are just telling people, when in doubt, apply. You know, apply now, apply as soon as you think you need the funds. If you're currently closed, you know, go out to our portal, apply for those idle loans. Let us make the decision. These are trained people who work in our disaster centers day in and day out. They know the eligibility better than any of us. So always make sure, if you think, if you need it, apply. They will walk you through. There are some questions on both of the applications that may require additional information. Right now for the idle loans, all you have to do is submit the application online. For the PPP loans, you will follow your lender guidance, and you know, each bank may have something slightly different that they're doing, maybe a checklist that they're asking for, just a way to gather the information so that they're sure that they have all of the information that will assist you. For our program, if something needs additional information, your case manager will reach out to you. They'll ask you for that additional information, but right now it's quick. It's the online application, nothing else needs uploaded. And for the Paycheck Protection Program, the bank is going to need your payroll documents so they can determine your payroll costs annually and run the calculation. If any of you have looked at our application, it walks you through the average monthly payroll cost times 2.5. It asks you for your number of employees. And again, it's a brief 4-page application. I would ask and caution you to just take the time. It's a brief application to read through it. Make sure you understand what you need to provide to the bank. Make sure that you understand the instructions for filling out the form, and so that you are ready whenever you go to the bank, when you apply to us for EIDL, when you go to your bank for the Paycheck Protection, that you know what you need and you're ready. And the bankers can get through a complete application much quicker and easier than if they have to keep going back to you. So make sure that when in doubt, that you are applying. Don't self-select yourself out of the programs. Let us make that determination. Let your bank make that determination. And, you know, I know that these are trying times. We're doing everything we can to get information out as quickly as we can. As I said earlier, you know, we are improving every day, every hour to make this easier for you to access. And, you know, we will continue to give you our support in making sure that we're helping you during this time. So thank you, Bill.
Angel, thank you. That is great information. And, you know, thanks for all the hard work. I know everybody in the industry, as well as at the SBA, has been scrambling 24/7 for the past week to make this work. I do have one question because it came up in the programming we're doing on Channel 11 through our region's business, and that for the payroll protection plan in particular, but maybe for the disaster loan as well, do people have to prove they're being negatively impacted by the COVID-19 crisis, or do they just apply anyway? They
are
have to
just
demonstrate that.
They are applying. I mean, if you are a non-essential business, you should be applying for the economic injury disaster loan. But a lot of our businesses who are operating, you know, their revenues are cut in half because people aren't frequenting even the businesses that are open. So absolutely, they should be applying.
So the assumption is everybody's impacted by COVID-19. There's no reason to demonstrate that, right?
Absolutely. There are questions on the application that are certifications that, you know, yes, you know, there's a need because of this, but it's not a detailed written explanation of what that means.
Excellent. All right. Well, I know there's going to be plenty of questions for you, and we're going to get to that in just a few minutes. But first, we'd like to introduce our second speaker, who is Heather Thomas, who's Vice President and Senior SBA Development Officer for Huntington Bank. And Heather, welcome. Great to have you, and looking forward to the information you're going to share.
Bill, thank you so much, and thanks for that great question back to Angel there. I had to keep myself on mute. I noticed that as soon as that question got out of your mouth, she was answering it already, and I wanted to do the same. There's a reason that there is no proof of hardship required with this Paycheck Protection Program, folks. We are trying to get capital into the hands of folks that need it. So I love Angel's direction. If in doubt, apply. We really want to make sure that these funds get into the hands of the business owners who need this capital. Just a quick introduction to myself before I get started on the rest of the information that I have to share with you today. I initially started with Huntington in February of 2010, and I've always had the pleasure of helping business owners directly through my various roles here. My current role has me focusing on the SBA programs available to our clients exclusively. And as the #1 SBA lender, Huntington is playing a critical role in helping our businesses access relief. This will be a vital part of living our purpose through these next couple of months and helping businesses thrive. We and myself are so grateful to the amazing team of colleagues across this institution who are providing support to these customers, our customers, located in the heart of the country right now. I can tell you, just for a little bit of perspective, our teams are working through the night and 7 days a week, literally. We have also more than doubled the size of the team handling this type of volume. And I say this type of volume, I mean SBA volume in general. We have more than doubled the size of that team. We will do as much as we can to help small businesses get through the crisis. On my intro page with my contact information that you're probably looking at now, you'll see a link to our dedicated coronavirus page. So feel free to check back to that page often to see our most updated information. And as we move into the next page of the presentation, you'll see the header, which loan is right for me. Some of this information we heard covered already by Angel. I'm going to give you a little more information specifically around the Paycheck Protection Loan, but I really want you to kind of take a larger look at this page and keep it as a guide for yourselves. This is not specific necessarily to Huntington Bank. This is meant to be a guide for what should you do in pursuing capital support that's available to you. So you'll see 3 different headers or subheaders across this page: the Paycheck Protection Loan, the Economic Injury Disaster Loans, the SBA disaster loans that we've heard about that have been in place for a couple of weeks now and have always been in place, but have been emphasized in the past 2 or 3 weeks. Angel referred to them as the EIDL loans. You'll see that acronym there too. You'll also see on the right a header for traditional SBA 7A loans. These and more are options that are available through this time. I want to highlight an overview in more detail the Paycheck Protection Loan Program, and then I'm also going to go through those other ones for you today to give you a little more information. So starting with the Paycheck Protection Loan, or PPL, if you hear me use that acronym later. Angel said it already, the purpose is to provide emergency working capital to keep your business operating during COVID-19. The use of the funds provided through that: payroll costs, rent, interest payments, and utilities. Keep in mind at least 75% of the loan funds must be used for payroll costs to be eligible for that forgiveness portion that's available. So these are the loans that you hear about, that it is a loan, yes, but it has a forgiveness aspect. And if you use the money as indicated, you can be eligible for up to 100% forgiveness. The amounts up to $10 million, but really the guiding factor here is that payroll expense. So 2.5 times a business's average monthly payroll. And it's going to be whichever is less. If you hit that $10 million bucket, or if you're below that, the part below would be the qualifier there for the amount of the loan. The rate, fixed interest rate of 1%, we heard Angel mention earlier. And she also spoke a little bit to the structure. This is a 2-year term. There are no payments for 6 months. This is automatically done in the structure. Keep in mind, interest will accrue during this period, but again, 1% interest rate on these funds. And that forgiveness clause within it, which is so important to so many folks out there. Up to 100% of eligible expenses paid with loan funds during the 8 weeks following the loan closing, subject, of course, to compliance with the program requirements. We heard about the features already: no collateral required, no guarantor support required. Some really exciting things on this one. We hear about how some nonprofits are eligible too, as well as some other folks that aren't traditionally under the SBA umbrella. So some really exciting things that the SBA has given us to work with this program specifically. The economic injury disaster loans in that middle column are the EIDL loans. We heard a lot about this program from Angel. She did a really nice job of overviewing this for you. The use of funds does include fixed debts, accounts payable, and other expenses. And just like she alluded to earlier, these programs are not meant to be duplicative. So if you've already applied for EIDL, you can still apply for a PPL. That PPL is to cover payroll. So if EIDL funds are available, they can't be used for the same purpose. If you've already received those funds for payroll through EIDL, we would want the PPL to pay off the EIDL portion that's specific to payroll. You can have both, and EIDL does cover a larger bucket than PPL. But if they both support payroll, PPL will need to pay off the EIDL funds specific to that payroll. This is a good old-fashioned loan. No forgiveness in this one, but a phenomenal rate structure available to you here, including a term and amortization of up to 30 years. The SBA has been phenomenal through the past weeks of pushing out information about this program. In addition to Angel supporting this program and helping us understand it, Dr. Kelly Hunt has gone through slide by slide and step by step on how to apply. Remember what Angel said? If you apply today at the bottom of page 4 and you've submitted before, there's a box that you may need to check if you've submitted prior to March 27th, and we'll be submitting again. So reach out to the SBA if you have any questions on doing that, or if you've already applied, your case manager is dedicated to help you through this. In addition, we've got the traditional 7A program. So if you tried the first 2 loan buckets, you've proceeded with needs in both of those, or one of those, and you find yourself still in need of capital, remember, we've got the good old SBA program that's always worked so well for folks. Purpose there, new money for recovery. Purposes unrelated to COVID-19. This is the SBA's flagship program. We use it all the time here at Huntington. We love this program, and we can use that one loan for a lot of different uses of capital. So talk to us, talk to your lender about what you can include in that program. Everything from refinance of current debts. We know from Angel earlier that's not available through EIDL, but the 7A program may be able to help you with that, so consider that as well. And we're still looking at business acquisition activity so that old business as usual that we've done in the past can still be supported through this program. A little bit of information there at the bottom around the terms and amortizations that are available, and generally speaking, the amounts of funding available. We'll move then into some other options that you don't see here on this page, but I will mention there's other help available. A lot of banks are trying really, really hard to help their clients. Options may also include payment deferrals, late fees on loans, and credit card assistance. We're doing all these things here at Huntington Bank and offering those to our clients. Please check with your current bank. They want to be able to help you through this, and a lot of banks are putting out really nice programs to help you. Don't be afraid to ask. Moving into the next slide. The Paycheck Protection Loan, a little more detail. So this is the one in the first column from that last page. Now we're going into a little more detail here. The 100% SBA guaranteed loan. In the workings of it, we also see again that payroll being the determining factor in the loan size there. And remember, no collateral, no personal guarantees. We talked about payment deferral for the first 6 months and a 2-year term associated with this, and that great forgiveness clause that's going to be so instrumental to so many businesses. I want to hit on eligibility here. To be eligible, business must have been in operation on February 15th of 2020 and had employees for whom salary and payroll taxes were paid, or independent contractors. We see here that it is nonprofit friendly to an extent. So we see the option for this highlights 501c3s. 501c19s also qualify. So we get an option to include some more folks here under that SBA umbrella. And sole proprietors, self-employed individuals, and independent contractors may be eligible as well. On how the proceeds can be used, this is a big call out. Keep this in mind. I said it earlier, at least 75% of the loan funds must be used for payroll costs for that forgiveness. Up to 25% can still be used for those other things we hear about, but up to 75% needs to be used for payroll costs to allow that forgiveness to take place. It can include costs related to the continuation of group health care benefits during periods of sick, medical, or family leave, and insurance premiums. I have a little bit of information in the bottom right. Check with your lender. Most banks are really helping clients weed through this and get through the PPL program and get the application in right now, but this is a really good general guidance around what's next and what should be gathered. If you haven't applied yet and you plan to apply, grab the 2019 and 2020 year-to-date monthly profit and loss statement, 2019 and 2020 year-to-date payroll reports. We are trying to be forgiving here, generally speaking, so you're not going to see a lot around the quality of financial statements required or the type of payroll reports required. We're really trying to be all-encompassing here as much as possible. Also, state income, payroll, and unemployment insurance filings, tax ID and EIN, and complete ownership information. And then if you are a Huntington Bank customer, please visit us at huntington.com/coronavirus/business-resources for more information, or the easier way when this gets disseminated out to you after the webinar today, the link is in the first page of my information. And you can go ahead and use that link to click directly to that site. And it also helps our clients by providing options on how they can apply for that program. So Bill, I'm going to kick it back to you.
Very good. And Heather, one follow-up on that. You have your URL obviously for Huntington, but the go-to position for the Paycheck Protection Program is to go to the bank you already have a relationship with. Is that the basic instruction first before you try to move on to other resources?
You're asking the right questions, Bill. Definitely. I think that that's going to be pretty common guidance that you hear from lenders. They're going to ask that you go to your current bank and you look to see if you can apply through them for this program. I will say that banks still have a need to know their customer and know who they're doing business with. So it's going to be easiest for the financial institution in order to fulfill those requirements that are required by the Bank Secrecy Act and Anti-Money Laundering Act. It's going to be easiest for the bank that you are a customer at to be able to work with you and help facilitate the flow of those funds.
Well, and I know everybody, all business owners are concerned about the speed that this will take, because a lot of them are desperate for money, I'm sure, immediately. So another good reason to work through the bank you have a relationship is presumably that may grease the wheels just a little bit.
Bill, I think that's great guidance.
Cool. All right. Well, thank you, Heather. Really appreciate your all that information and insight about this, all this fast breaking news around these programs and their implementation. Now it's my pleasure to turn things over to my colleague at the Allegheny Conference, Allison Treaster, who's going to help to facilitate the Q&A. We're open for your questions. Allison.
Thanks, Bill. And thanks, everyone. We received quite a few questions by email and also live through the Q&A. We're going to do our best to get through these today, and those that we don't, we're working on an FAQ that will answer a lot of your questions from last week's webinar as well as today. So I think we'll start, Angel, with you. There are a lot of questions about the PPP and fewer about the EIDL, so let's knock those out first.
Okay.
The first one is, if you have an application number and applied for EIDL March 27th but haven't received the $10,000, should that be a point of concern, or is there any way to track it?
If they applied on which date?
After March 27th.
No, then as long as after March 27th, they did check the box, that's the key. They have to check the box that says, yes, I want to be considered for that 10,000, then they would be in the queue for it.
Okay. And do you need to personally guarantee the EIDL?
It depends on the dollar amount. So originally, whenever the loan was rolled out, it did require personal guarantees. As we continue to move into the program, different legislation came out through the CARES Act that was finalized. And so the amount of the loan depends on if you have to personally guarantee them or not. And that case manager will work with you on that.
Okay. Is there a minimum credit score needed?
There is not. We have not heard that there's any minimum credit score. However, if there has been prior losses to the federal government, it does not make you ineligible. It just means that we're going to ask for potentially some additional information.
Okay. And then can you clarify again, is this a true grant that will not need to be repaid, or does it eventually need to be paid back?
The EIDL program? does need to be repaid. And that's why what we are telling people is for the EIDL program, you don't ask for a dollar amount. It's calculated based on your operating costs. And so we're advancing it incrementally. So if you don't need it, you're not overexposed. And if you're operating June 1, then your loan amount would be less. However, if you're in an industry that can't reopen for whatever reason, you can extend that, and you could actually go back through your case manager and get more funds. Does that help?
I hope so. We're going to move along to the PPP. And Heather, if you want to jump in, and then please feel free to include things as well, Angel. Can you clarify how headcount is defined, specifically how full-time, part-time, and whether 1099 employees can be counted?
Sure, I'd be happy to. Thanks for the question there. So we're looking at actual headcount of direct employees. Some of the nature of this question goes back to the good old SBA program as we've known it historically. And this looks at individuals employed on a full-time, part-time, or other basis. I will say something that's come up a lot with the Paycheck Protection Program, 1099 folks do not count in this calculation. So I will say actual headcount of direct employees. But if you have folks on 1099s, they do not count in this for you.
Okay. And then what about student workers for colleges and universities?
That's funny. I got that question yesterday for the first time. I hadn't heard it prior to that. But if they've been on payroll and they're going to still be on payroll there, if you are paying them, they can count toward this.
Okay. Also, quite a few questions about sole proprietors. This one is, I'm a single member LLC with no employees and I take a draw, not a paycheck. How do I calculate my average monthly payroll?
Yeah, we've heard a lot from sole proprietors in general here. So thanks for bringing that up. That's a great question. And I'll include kind of the 1099 folks in this too, because we just said that the 1099 folks don't count toward head count. And right now in this application period that we're in, we're using really salary expense items through the profit and loss. So included in this would be 1099 folks, meaning on April 10th, that's when it's going to start for you to be able to apply. So individuals that receive 1099 income can apply starting on April 10th, and sole proprietors as well can apply for that as well. And I'll give you a little bit of guidance here as to what's considered a payroll cost. For an independent contractor or sole proprietor, wage, commissions, income, or net earnings from self-employment or similar compensation. That's the guidance that we have from the program procedures. And Angel, I'll steal your words again. When in doubt, apply.
So another follow-up on the sole proprietor, would you list one for employee on the application even if you don't get a payroll or a W-2?
I don't think that's gonna cause too many problems. I'll say applications are pretty, I think they're probably referencing that SBA application going around, and a lot of banks are kind of putting that into their own application. I would say that's probably generally a fine way to proceed, and then it will go through the appropriate due diligence through the application phase.
Okay, and last one for now on the sole proprietor. How can you provide sufficient proof for loan forgiveness?
There's going to be a lot more to come on what constitutes the proof for loan forgiveness. What I will say is that from the time of disbursement of funds, you have 8 weeks to use the money. And what I would guide you to do is to focus on what qualifies in terms of forgiveness and really kind of start there and work your way back on that. And keep in mind that in forgiveness, I spoke to this a little bit earlier, but keep in mind 75% of what's used to constitute forgiveness has to come from that payroll expense category. Up to 25% can come from the other categories. So payroll costs, meaning that 75% category. And then we also have in the other 25%, mortgage interest payments can be included in that, rent payments, utility payments, interest payments on other debt obligations, assuming they were incurred before February 15th. That's a magic number you're going to hear a lot through this legislation. And then in addition, there's also a component that includes refinancing of an SBA idle loan made between January 31st and April 3rd. Can qualify as well. But remember, at least 75% of the Paycheck Protection Program loan proceeds should be used for payroll costs.
So building off of that, a lot of questions around, can funds be used to cover insurance, specifically personal liability, auto if they're for work vehicles, workman's comp?
I've had some questions there too. I've heard the same thing around personal liability, auto, workman's comp, health insurance, and things like that. I would say the 25% component can include interest on mortgage obligations incurred before 2/15, rent payments on leases, and utility payments over the 8-week period following the date of the loan.
Okay. Changing gears a little bit, being foreign owned but a PA registered LLC, are they eligible for assistance? It says the PPP and the idle applications require owner information and assume the parent company is US based.
Good question, and I think this is one area that we're seeing some development in here. So what I'll say is the guidance for right now. There's ongoing discussion around the eligibility in general, but if the company has employees whose principal place of residence is in the United States, we're encouraging those applicants to continue with the application process. And if we receive any future guidance, we'll apply that as necessary. But we are encouraging folks to apply if they have employees whose principal place of residence is in the United States.
And I would echo that with Heather. That is our guidance as well, that as long as those employees' principal place of residence is in the United States, we are telling people to continue along the application process.
Okay, great. This, I guess, could apply to both as well. My bank says they are not accepting PPP applications yet. Should I go to another bank or wait for mine to be ready?
I'll speak to this one a little bit. I think that's something that a lot of folks are going to be hearing. I think that's kind of common across the industry right now. I will say that right now here at Huntington, we are prioritizing applications for our clients. And we've certainly bolstered our forces to be able to work through that volume as expeditiously as possible. Like I said, we've more than doubled the size of the team handling this volume. And we've also moved to 7-day-a-week operations. But we certainly recognize that there are going to be folks out there who simply don't bank with a bank who's going to be processing these applications. So we have not come out and said that we would only do clients forever. We were staying very open and trying to get the hands who need the capital, access to that capital as soon as possible. We are currently prioritizing client applications. I think you'll hear that as well, but we're trying to move through these as quickly as possible and put ourselves in a position to be able to advocate for all small business owners during this unprecedented time.
And Allison, I'd just like to add, this is Angel, that I would continue to speak to your bank. You know, we had banks that weren't ready on Friday that are ready today, that might not be ready today, but are ready tomorrow. And that bank, I think our banks are just a wonderful partner and ally. They're open and honest, and they will let their clients know that we aren't ready, but we hope to be ready this week, or we're not doing them. And here's our guidance. If we know that we absolutely are not participating, then this is where you should go.
Great, thank you. A couple of timeline questions. The first one, for the PPP, what time frame should we use to calculate average monthly payroll costs?
There's a little bit of allowance there. So we looked at average payroll cost. It can be either for a 2019 period, it can be for a rolling 12 period. And what we're really looking to get to is that monthly figure. And keep in mind that if anybody has a salary or a payroll component over $100,000, you need to back out the component that's over $100,000. But average out to get to that monthly figure. I've also had some folks reaching out to me in cases where they've purchased businesses and they don't necessarily have that long of a period available. Again, we're looking at the data that's available and we're driving down to that monthly payroll number so we can get to 2.5 times that number. And then there are some ability for seasonal businesses to look at the seasonal component of that salary too, to predict what will be used for themselves. I would say when you approach your bank for financing, have this information prepared. We are in a position to be able to provide general guidance and help you make your own determination around the figures that should be used for you. But again, that would be your own determination. So your bank that you're working with is going to be somewhat limited. They can't tell you the figures to be used. So pay attention to the information that you need and get that information ahead of time.
Okay, so in terms of hearing back and receiving a couple of questions, we submitted for PPP on Saturday. Do you have any indication on when we'll hear back?
I don't. I'm not sure who they submitted with. We have many other folks up and running through the weekend here. So one of those early birds, I'm sure they submitted with, and I will not speak to the timelines here on our volume at Huntington. I certainly can't do so for other lenders as well. But I really do think we're all coming to the table and trying to get this capital in folks' hands as soon as possible. The only thing I will say, and perhaps I shouldn't, is that we are pretty excited here at Huntington. We are hoping that within the next week, we can get some of the first disbursements made here, but no promises on that. And I think all banks in general are working through that volume as fast as possible.
Absolutely. Again, unprecedented times, all of our banks understand the need. I don't know any bank that hasn't been working 7 days a week to make this happen and get the money in people's hands. But I don't think that I've heard anyone actually have a specific timeline that they're offering a turn time of X amount of hours.
So one question, how long from the application upload do you get the SBA ID number? Maybe that's one that you can answer.
That's going to vary for everyone. And Angel, I know you're probably ready to chime in here too, but again, that's going to vary by bank and by application process, but we're all trying to get to that volume as quickly as possible. And some applications are going to take a little more due diligence than others. I can say that where we've had questions and looked for clarification, we have seen substantial guidance coming in through Treasury and through the SBA. So we are really, really grateful that those support channels are there for us, but cannot give timelines as far as when specific parts of that application process will be achieved, but they will vary by lender and by application.
Absolutely.
Okay, a couple more questions, and these are not connected, so I apologize for the bouncing around. Can you delay the closing date on the PPP after you've been approved? And is the forgiveness only up to June 30th?
Really good question. I wonder too, if Angel did such a nice job of speaking to EIDL, I wonder if when I'm done here on PPL, if we should just revisit EIDL. But I will say on the payroll protection loans, we really can't delay that process. And we get this question a lot as folks are trying to determine, do they need the money? When will they be, for some of the folks, when will they be able to open their doors and operate again? I just remind everyone of the spirit of this legislation as it moves through so quickly. The spirit is really to help keep people off of unemployment and to help keep those payroll channels in production and get money into individuals' pockets. So I would say it's a decision you're going to need to make for yourself. Keep in mind that from the time of disbursement, you'll have 8 weeks to use the money. I have had business owners considering whether or not they wanted to bring folks back on payroll, even if their doors weren't open. But since there's no delay to funding, think around the vehicle available through PPL. 6 months payment deferrals on that program, 1% interest rate on that program, and up to 25% of the forgiveness dollars being able to be used for those other types of expenses. So I would just say it's a very kind and helpful program that the SBA has laid out for you. So use that in your consideration as to whether or not to move forward with an application. But if they are going to lock down the funds from the program, the clock will be ticking on those funds when they are dispersed.
Agreed. And for the EIDL program, keep in mind those are going to be rolled out a little bit different than the PPP program because they're working capital, so there'll be incremental rollouts. And if you do take the EIDL, as long as the use of proceeds was different from your PPP loan, you can do both. If it was in fact used for the same purpose, you would refinance your EIDL loan with the PPP. So, you know, again, you're welcome to apply for both and work out the logistics as they're approved. If they're different purposes, if they're the, you know, they're fine. If they're the same purpose, and you would just refinance one with the other.
Is there any easement of the affiliation rules for companies whose investors are private equity or VC funds?
No.
Good question. I will say this is an area that we have had a lot of questions on too, and we've been servicing a lot of continued dialogue on this. I think there's a little bit of development, just generally speaking, around how banks are interpreting some of the aggregation and affiliation here as well. But Angel, I think you were going to jump up to any future change in that.
Right. And, you know, we keep referring to this as a, you know, fluid situation. Guidance, even once, if you actually sat down and read the 31-page document, it says additional guidance will be forthcoming in several places as we work through all of the smaller details within this program. Guidance was released over the weekend for nonprofits, so we continuously see updates. So I would say, you know, stay tuned, stay in contact with your banker, and they'll have the latest information that we have as you're applying.
Okay, and this will be our last question, and any closing thoughts that you all have, but I think there's some concern around larger small businesses with better resources taking the funding before mom and pops are able to access it. So can you speak a little bit to how, if there are any measures being taken to show equity across the board to companies?
The program is a first come, first serve program. So, you know, we know that we want people to get their applications in as soon as possible. It may run out at some point. We don't think it's going to run out all that quickly, but it is currently first come, first serve for both the EIDL and the PPP program. Heather, your thoughts?
Yeah, I agree. First come, first serve, definitely. I think that some of the things you've heard even during our segment today kind of feed into that to try to make sure that the business owners that are in need of money get access to that capital. From one regard, it's really funny that we find ourselves sitting here talking about $350 billion and the timing of those funds and how quickly they'll go. But this is, of course, a nationwide crisis. And this health crisis has certainly put a lot of economic strain on some of these operations throughout the country. So it's a very real question, and we're hearing it a lot. Most banks that I hear about working in this program are working hard to prioritize client applications and get those dollars out to clients. And then also we talked a little bit too about how soon do I have to use those funds? What happens if I can't use them in time? That goes into that a little bit too, right? So if folks are applying for these funds because they need them, there's no delay. If they're going to be carving funds out of the program and using those funds, that's one of the reasons the clock will be ticking right away. But we'll all work expeditiously to make sure that we can try to get those funds out as thoughtfully as possible and as quickly as possible to the businesses that need it. But if you're on the fence, I would tell you don't wait to apply. Yeah, definitely apply.
Okay, thanks everyone. Bill?
Allison, thank you so much. And Heather Thomas from Huntington, Angel Marschik from the SBA, thank you both so much. Great information, and hopefully people will be able to follow your lead and make sure that they get the relief they have as this crisis continues on. If you missed part of the webinar or you want to share it with your colleagues, friends, neighbors, we will be posting the webinar and all the answers to all these questions on our website at AlleghenyConference.org. We'll get that up later today. I'd also like to mention, join us on Sunday morning for Our Region's Business on Channel 11, the show the Allegheny Conference produces in partnership with the station. We're going to be featuring Bob Stein from Pitt's Institute for Entrepreneurial Excellence, and he's going to dig in specifically to the issues around sole proprietorships. So that'll be Sunday at 11 on Channel 11. And if you're up early tomorrow, join us at 6:15 a.m. on Channel 11 News. The Allegheny Conference is launching a twice-weekly feature with the television station called Dollars and Cents, and we're going to be answering viewer questions about the impact of COVID-19 on our regional economy, on everybody's personal finances. So please join us if you're up 6:15 in the morning on Channel 11 News. And finally, once again, we've got to thank all of our sponsors who've made this outreach possible for the Allegheny Conference. In particular, Peoples, Giant Eagle, Highmark Blue Cross Blue Shield, and UPMC Health Plan. Without their support, we would not be able to activate all these additional communications channels we're using right now. And of course, our ongoing appreciation to the 300+ members of the Allegheny Conference Regional Investors Council for the support they give us all year round. That makes it possible to do our work to improve the economy and the quality of life across all 10 counties of southwestern Pennsylvania. Thanks again for joining us this afternoon, and we will communicate, and if you visit our website, there are more webinars to come, so please visit AlleghenyConference.org to find out more about them. Thank you all and have a great day.